Singapore's inflation rate has hit its highest in 5 months. The consumer price index in June rose 5.2% from a year ago, in line with market expectations. Those in the highest income group have faced the highest rate of inflation this year, but experts say that the impact on low-income earners would still be significant because of their low earnings base.
Higher costs of transport and accommodation were among the main factors again which pushed up headline inflation numbers in June. And this time is the highest since this year's peak of 5.5%. Headline inflation is not expected to moderate until at least the end of the year.
Well, the next few months we can expect that inflation numbers will remain rather elevated. So they are going to be, the firmer side of 4.5%, perhaps even above 5% for a couple of months. This is going to be primarily driven by higher housing as well as transport costs.
So far for the first half of the year, inflation has risen by 5%. The increase was higher than the 3.7% in the second half last year. In the first 6 months this year, the top 20% earners in Singapore experienced a higher inflation rate compared to the rest. This was largely due to the significant price increases for cars and petrol. The higher inflation rate expected in the next few months is also a reason for the recent revision to the official forecast for 2011. It was raised by 1 percentage point last week to between 4 and 5%.
Inflation has continued to remain high. And furthermore, I think this to a large extent is also reflective of what's happening in the region as well. To a large extent, I think this also reflects the fact that monetary tightening is now shifting towards a lower gear and that central banks are beginning to be more cautious.
Now, since last April, the MAS has been tightening its monetary policy to tackle inflationary pressures. And these policies are expected to play out more strongly in the second half of the year. So in its upcoming meeting in October, the MAS will have to decide whether to tighten its policies further or to take a step back because of higher uncertainties in the global economy.